folks, I'm L.A. Little, and this is your weekly TA Wrap, where we take a look at these markets and we do it from a neoclassical perspective, asking ourselves each week, what happened last week and what does it tell us about the coming one? I do this show once every week, Sunday night, live at 9 o'clock Eastern Time, here from what is another snowy night in the Rocky Mountains. Folks, I'm glad you could drop in. We had a big week last week. As a matter of fact, we had a down week of size, and we haven't seen one of those for a good 7-8 months at least. And the last time we had one of this size was probably a couple of years ago. So it was not insignificant. It doesn't mean the world's going to crash in, but it does mean that we should pay attention, because a lot of things are starting to line up that potentially could cause something even larger to take place. So I'm going to spend a little time looking at that and spend some time considering what kind of damage has been done, what to expect. I got a couple of questions that are emailed to me. I'll try to hit those. So let's get rolling here. So last week, we had a down week. We were down about 3.5% on the Dow. The S&Ps were down 2.6%. Friday was a huge day down, though. Dow down 318 points, closes 15,879. The Nasdaq was down 90, almost 91, 41.28, and the S&Ps dropped 38, closing at 1790.29. If we take a look at the markets themselves, let's start, and I'm using a different format here, so let's see how this works. I've got a much larger screen up. Hopefully the clarity will be better as a result. So S&Ps on the weekly, you can see, still we don't really have any significant damage yet on a weekly basis. The damage that has been done on the daily, and we'll look at that next. But the weekly, the key point here right now is that this bar, right, that weekly bar now has 5 bars beside it. If we go without crossing underneath the bottom of this bar, that's going to print as a swing point low next week. That low is 1767.99, so roughly 1768. We're at 1790. So you got to drop another 22 points basically to hit it. Is that possible? Sure, it's possible. We dropped 30 on Friday. Is it, we almost 40 actually, it's 38. Is it likely? Well, I don't know if it's likely. It certainly is more likely that we're going to finish out a downside structure that now is in place on the daily. So let's look at that. So remember, we had a little range that was taking place up here. It was in this area, right? And that range extended to the top side, and it also extended potentially to the bottom side. And so when we look at the bottom side, and actually I didn't get those quite drawn right. I missed a point here. That's why they look wrong. So let's do it again. So we had the top range. Let me grab my pointer again. Was to the bottom there. There you go. Now we got it. And then that was basically from this high down, and that takes us down into about another 10 points to the downside, which is about 1780, maybe as low as about 1776. And the reason I draw it as far as down there is I make it equivalent to the top range. Maybe it could be just a little bit lighter, a little bit lower, right, to be accurate. It should be about right there. All right, those are about the same size. This bar, right, these two bars over here look to be kind of where it's going to try to get to. 10 points down would bring us into what is the extension on the way down, right? Range trade breakout, you range trade breakout into here, you try to extend the full size of the power range. That takes us down to 1080, and this is about 1080, 1078, I think it was. Let me see, not 1080, 1780. and this one is 1774. So anywhere from about 1774 up looks to be about where it could trade to. That would fulfill that projection on the downside now that you got the break. It doesn't have to do it immediately though. But what's important isn't so much that, 10 points down it could do. What's more important is going to be what it does when it comes back, because now, right, you've got this swing point low that was broken. Volume's not that heavy on it, but go back to what was important before, which were these bars, right? Those bars are going to be hard to get over on the way back, and those bars are right in that swing point lows area. So I suspect when this tries to bounce, whether it bounces from this level or bounces from a lower level, that bounce, oops, wrong tool, that bounce is going to take it back up and set up, more than likely, an ABCD structure. So let's just assume it's to the bottom, back up, right, and you can see an ABCD structure to the downside. That structure, if this bar is that same low we were just looking at on the weekly. If that low doesn't break this week, it's going to become a swing point low, and then you're going to have a swing point low on the daily, on the weekly, and a setup that could potentially break it. And when you get that, what does that do? That sets up a faster move to the downside potentially. And if you look at some of the other indexes, they're set up the same way to do the same thing. You could get a faster move. Usually the market will give you one out. And that out in this case would probably be back in this area, right? Somewhere down in this area. So I, as a trader, as an investor, I should be aware that there's the potential structure to take us lower. It doesn't show quite as clearly here as it already shows on the Dow Jones. So let's look at the Dow Jones next, because there the setup's already pretty clear. And if we look at it on the weekly, you can see the swing point low, 15,703 and 3/4. If you go to the daily, that's the same swing point low here, 15,703 and 3/4. So in other words, a break of this area will cause a break on multiple time frames. And in the case of the Dow, you've actually got two of them. You got a swing point low here, one there, and you could see how that could cause, when you line it up with the weekly, a faster move to the downside. Now recognize it's already made a move to the downside. It's not like it hasn't, right? Because it has. And it's coming off of an ABCD structure already that's more than completed already. So it would make sense to see this at this point, right, do some sort of a bounce ABCD structure, then come down and try to break it. And it may be that this thing doesn't do much of a bounce. It only does a small bounce and gets a bigger push to the downside. The bounce is what's going to be important, right? Can you get all the way back up here and test these? Or do you die somewhere on the way up there and never even get back to, say, this area? That bounce, when it gives it up, if it gives it up, which it does look like it will now, that is going to tell us much more about what kind of break we're going to get. And I suspect the tables have turned, right? It is no longer an up market. It's been blindly up for a year. We had one small pullback in June. Other than that, it's been pretty much straight up for 14 months. I told members some time back that the MTTFs, right, is like at the end of last year, and I've probably mentioned it here as well. The MTTFs were set up such that the end of this month or the beginning of February, it was going to get more dangerous. And not only was it set up that way, it's actually starting to happen. Here's the Dow. It's only 62 on this time frame on the monthly, but on the weekly it was 85, right? That's fairly extended as it is. If we go back and we look at like the S&Ps, you got 80 and 86. If you look at the NASDAQ, right, 80 and 93. And it's 90 because the NASDAQ hasn't broken. The rest weren't quite that extended yet. But you can see how extended these are. I mean, they can only go to 100, right? These are extended. This is a very extended market. And the odds of a larger pullback at some point continue to grow, right? At least to get these reset. And to quickly remind folks, especially folks maybe that are new looking at this, to get a reset, you have to break a swing point low. Well, so if we look at it on this time frame, for example, I'm on the NASDAQ, which is 93% right now. You'd have to print a low up here somewhere and break it to stay up higher. Otherwise, you got to come all the way back here and break this one to get a reset. That number's 3911. We're still trading at 4100. You know, so that's another 200 points down to get the reset. That's not a small move. That's 5%. Right? We just came off, you know, what did we come off? 1.7% off, you know, we basically had highs this week. So we're down 1.7 from the high, or actually down about almost 2 from the highs. So you'd have to go down another 5. That'd be a 7% correction just to get the reset. 7% is a normal pullback, a normal correction, right? And that would make sense. So realize that, you know, given the extension, a normal pullback, something that's still bullish, could be fairly sizable given this extension that we've had. All right, I could look, and I am going to quickly look at a few of the sectors, because then actually the first thing I'll do, rather than go straight to them, is pop over to show you a different view. Matter of fact, let's go back to here and do it here. If we come up to the tools and pop over to current trends, you can see here on the current trends that you're actually starting to get breakdowns, right? It's slow in coming, but it is on its way. It's happening. You're getting breakdowns, right? Changes of trends on the short-term time frame, and almost every one of them. The only one that hasn't changed yet is technology, right? In terms of the trends, right? Bearish. I mean, they've all changed short-term. So we got short-term trend changes on these sectors and on most of the indexes. Only one left, only one sector left. The key thing always is your intermediate, and we're starting to see breakdowns here as well in terms of trend transitions. We've seen it on the energy sector. We're seeing it on the discretionary sector. There's a couple other sectors now that are close to doing the same thing again. So I suspect, you know, we're very close, and that's what we're going to look at now. We're very close on some of the other sectors. So let's pop over and I'll show you what those look like. You know, the reason for showing this is that there's two basic premises to neoclassical, right, in terms of behavior. One is that, let me clean this up. One is that short-term trends lead to changes in intermediate. Changes in short-term lead to intermediate, lead to long-term. That's true on all stocks. That's true on the markets. That's true on the sectors. That's true on the markets, right? So that's one premise. The other premise is that stocks, right, they lead the sectors. So individual stocks lead the sectors, which lead the indexes. So in other words, to get a breakdown in the indexes, you need individual stocks to break down, and you need, well, once that happens, then the sectors can lead the general market down. And it happens this way, right, in terms of time, and it happens this way in terms of breadth. So stocks down here, right, the stocks down here, the sectors here, the general market's there, and in terms of time, it's short term, intermediate term, long term. So going back now to the sectors. Let me grab the sectors. So what we can see here is that some of these, and let's just take the ones that are getting close to actually breaking on longer term time frames, on the intermediate term. For example, the XLB. You can see it here, intermediate term time frame, low 43.51. We're trading at 43.87. It's only, it's less than 1% away to break it. Multiple swing points on the daily. Another one here, that could lead to a faster break. You've already had a huge extension. Should bounce, then come back and probably try to break them. You can see it on others too. I mean, we've already seen the XLE break, but the XLI, for example, is not that far away. So if you look at the XLI, XLI has a swing point low at 49.13. We're trading at 81. So again, about 1% away, maybe a little bit more than 1%. Again, huge decline. Multiple swing points broke, fast extension to the downside. And there's others as well. So sectors, usually when you get a couple, you'll get the rest of them or you'll get most of them. We've already got a couple to transition. That suggests also that we're probably going to see more. The fact that the MTTFs are extended, that's a blunt instrument, but that one's also suggesting difficulty in trying to rise and the need to do resets. Now that we're seeing, we've seen for a long time divergence, and I haven't talked about it all that much, but there's been huge divergence in two basic areas. One is individual stocks mostly not going up, yet the index is going up. And the other divergence has been that this tech sector has gone up while the rest of the market hasn't been able to go up. Those divergences, the extended MTTFs, and now the breaks and transitions and trends, all of them suggesting one should be careful. Okay, let's look at, well, we got a few more minutes. Let's look at the OX markets, and then let me go take some questions that were emailed to me. And then if I have time, I'll walk over to the foreign markets. So I want to start with the bonds. The bonds have been working back higher. And to me, this is a safety trade that's taking place. Well, it's actually two things. One is we had seen already that even though we had got the break to the downside, and that break was on this particular bar, breaks to the downside, and that break to the downside also occurred with a break to the downside on the daily, right? It was a break here as well. Yet it was unable to extend in a fast way, which is what it should have done. When you don't do what you should do, you should expect the opposite, and that's exactly what you see here. This thing flipped around and ran the other way. Now, because it's a safety trade, it's extended the other way, and it's extended too far. You've got an ABCD structure that's already played out, right? It's completed. So that's pretty much done. Volume's been pretty heavy as a result on the spikes, right? It's coming into a resistance area up here, swing point high, so forth. That's going to probably give it some trouble. Going back to the weekly, that swing point high is in this area. You can see the big bar down, 108.37. This high is 108.73. That little zone that's created there should be trouble for this. We're trading at 107.48. So we're only, another 32 ticks from that swing point high, from major resistance. That would suggest that the general market, as this tries to pull back and set up another ABCD structure to take it higher again, the general market should be able to find some support and try to go the other way. So far, it's been a safety trade, and they've been pushing it the other way. But you've already had two, and the reason it looks to me like we're probably really done this time, it's been trying to get done but hasn't, is that you've got nested ABCD structures twice in here, both of them completed, right? So usually when you get that kind of completion, that really is going to be the end of it. So it looks like the bonds are going to try to come back on a rather immediate way. If we go look at the dollar, a weaker dollar is typically better for the market than a stronger dollar. The dollar has come back, right? We haven't seen a flight to safety in the dollar. So the dollar has come back. That's helped commodities, but it hasn't helped the market yet. But the fact that the dollar is hanging in this area and not rising in a safety trade or anything, that also seems to be market supportive. I would think that helps the bounce get underway. Popping over junk bonds. Yeah, we just looked at regular bonds. Junk bonds, of course, they sell off, and they sell off in a big way, but they had already risen back to new highs on the short-term time frame. On the weekly time frame, they had gotten over them too. They're going to pull back. But you know, the volume coming back into the bar it's coming back into, which is this little support zone in green you see, that looks to me like that should stop it, at least for now. But you can see the damage. There is damage. There was a flight, a fear flight that took place on Friday. Clearly took place. It wasn't just a little scared. It was I'm a lot scared. Gold. Gold continued to see inflows. Here's the weekly. It doesn't look that big, but it continued to see inflows on the safety trade, right? High is 122.32. We got to 122.30. We got 122.50, so we got over it. Closed underneath it. That looks like a failure at these highs. 120.12, it's still over. We'll see if it gets back underneath it tomorrow. Depending on the equities, I think that will dictate how fast this pulls back. So if the equities actually start to see money come back into them, gold's going to pull back fairly quickly. If it doesn't, gold will try to creep up and get into this resistance zone. Gold is getting a turn, right? But look at it on the weekly. On the weekly, it's just coming back into test on the last swing point low it broke. Actually, that one already been tested because it broke here. So it's just coming back into resistance. And that resistance area is pretty heavy from about 124 up. So, you know, gold can go up a little bit, but gold needs to come back. What gold needs to do, and probably will do, is set up some sort of a safety trade higher off an ABCD structure back down a little bit, right, that can get it up into the higher ranges up here. So it needs to pull back just like the market needs to bounce. Let's see what else. Those are the major things. So let me go pop over and take a couple of questions that were emailed to me, and I'll see if you guys have any. So one of them was CCJ. Let's see what CCJ looks like. And I think, isn't this Coca-Cola, if I remember right? Or what is it? Okay, so CCJ is XLB. Oh, Camco. Okay, so I think this is uranium. Alright, so you set a high, you got over it. I'm on the daily. You set a high, broke a swing point that's off the chart now. You got over the high with less volume, you came back. Okay, so the retest regen zone is the first thing to notice, which is in this area. So it's off the prior swing point highs, and actually you got multiples of them. So you had breaks of multiple swing point highs on the way up. There's 3 of them. I'm going to take the highest one next, which is this one. So that little area, you know, to me, the area that's most interesting is the overlap. Boy, my fingers are not working very good tonight. Let's try this again. Here we go. So the overlap is the most interesting part of this. So it's in this area right here. That would be where I'd be looking for it. And that also, if you draw it over, that also intersects with this swing point high, and the volumes are over there pretty good. So that would be the area that I'd be looking at for some sort of entry. That price point's about 20.93. Now we close this gap, come back in, do a retest, volume shrinks, that would be the place. Let's see what it looks like on the daily, on the weekly. And okay, so it's a good sign it hit with volume at the highs. So that's a good sign. So the swing point high here, it's already been tested. All right, so the lows, the interlapping lows here is in this area. That look good. And those price points are 21.40 and 21.25. Yeah, so it's a little bit higher. So yeah, somewhere in the 20. The ideal place is about 21, up to about 24, and it's not that far away from it. So if it squeezes back into this area with not much volume, around 21 would be ideal. And that looks to be ideal over here too. It looks like a range trade initially, back up to test these highs again and try to get over them on the weekly. That one's set up pretty good. And you've also got a nice ABCD structure here in place. Yeah, you got one from here to there. Actually, it's a little bit higher. It's up to here and then down and back up. So that's a fairly significant ABCD structure. Should break it out. And on the daily, you're probably going to set up one. So yeah, looks good. I like that one. All right, let me see. The other one was Tesla. I haven't looked in Tesla in a long time. The first thing I'd say about Tesla or any of these high flyers is this is probably not the place to be interested in them. So Tesla is the electric car company out of California. And let's see what it did. Well, it didn't sell off much yet, but that's a hard place to be buying. So the question was, what does it look like on the short-term time frame? Well, the place to buy it is the top, right? You can see the high volume bar here. You can see high volume bar there. You broke it with less volume as you went over it, right? You got over this swing point high, but you got over the prior breakdown. One of the things I've talked about before, and I've tried to make very clear, is a lot of times when you get these kind of breakdowns, right, these fast moves down, these stocks, for whatever reason, and I guess the reason really is because they just are, hot stocks. They'll tend to roll all the way around and go all the way back up to where they came from, and that's where this thing is. I definitely would not be buying now. And I'd be very suspicious of buying that retrace. If this market does get weak, the high flyers are going to go. They're going to go down. So I'd be very careful with it. And I can't see how it hangs over this. So this high was 181.43. You got to 182. You closed underneath it. That looks like a failure. It looks like a clean failure on the breakdown bar of volume. Again, I definitely would not buy here. I wouldn't short it either because there's still heavy short interest in it. But I would not be a buyer. Okay, let's see if there's any more questions. I don't see any, and I'm out of time, unfortunately. So I won't be able to look at the overseas markets. We have issues in China. China's breaking down. In particular, Hong Kong is breaking down. We've got issues in Europe, and we have issues in a lot of the emerging markets, the smaller ones like Turkey, Argentina, and so forth, as a result of currency issues related to the Fed. Tomorrow's Apple. The Fed's on Wednesday. Those are the two big, and then you got Google on Thursday. So you got 26, 27%, even more actually, about 28 to 29% of the Index 100 reporting this week. So almost a third of the Index. You just had Microsoft report. The other two biggies report this week. And you have the Fed. And you have all the fallout as a result of the potential Fed tapering. This market is going to try to bounce, but I wouldn't be expecting it to just continue higher like it has done in the past. This looks to be a different beast now. So if you're expecting that, I'd probably change my expectations a little bit and pull in my horn some because it's a different market now, finally. Folks, have a great night. Thanks for joining me. I'll see you tomorrow. Take care. Good night.